no problem too large for government to solve and no concern too small for it to care about.
A voice that most people, most sane, rational people, smart people, agree is one of the most conservative voices in the state of Wisconsin and beyond.
Will is an indispensable organization.
The essential mission is to keep the republic.
Welcome back to If You Can Keep It, a podcast created by Wisconsin Institute for Law and Liberty. This is Will Communications Director Pat Garrett, and joining me back as always is our president and founder of Will, Rick Esenberg, for another great episode. Today, we're tackling a fundamental question about the American economy and government spending, and it's, can we tax our way into prosperity? This seems to be the core strategy coming from the country's leading progressives, especially lawmakers like AOC, Bernie Sanders, and Elizabeth Warren. But we're also seeing some ideas coming from Republicans as well. And so we want to talk through the idea of taxes and if this plan of just taxing the rich aligns with the principles of growth, freedom, and the American experiment. And so joining us is the perfect guest for this, I think, is Grover Norquist. Grover is the president of the Americans for Tax Reform, a taxpayer advocacy group he founded in 1985 at the request of President Ronald Reagan. We're a huge fan of Ronald Reagan, to say the least. So he's the perfect guest. So Grover, thanks so much for having us.
Delighted to be with you.
Rick, it's great to be with you as always. We hear this, especially in the last couple of months. It's why it's the middle of the summer and we're talking about taxes. It seems like the Democrats, the chorus has grown that taxing the rich will solve all of the country's problems. And if we would just tax wealthy Americans more, Elon Musk, the latest trillionaire, maybe not a trillionaire anymore, but why is that just not the case? Like, why is that wrong?
That is what has been said for hundreds, thousands of years. It is, the history of America started with not even a tax revolt. Before the tax revolt, we had free trade zones. We had tax-free zones. Whole colonies were set up from Swedes and other countries on our among the 13 colonies. There were colonies, not just the British colonies, but others that were free trade zones and that had no taxes for some 6 years or so. And so taxes were central to getting people to come here, to not have them. When you read the letters back from the colonies to Europe saying, come on over, they say, it's really impressive. You get to keep the money you earn. You have to work very hard. It's very ridiculous, but you get to keep what you earn and you don't owe it to some prince. And it's on and on the difference as people talk to the Europeans about what it's like over here. We paid 1% to 2% taxes up until Civil War. Then it went up and then back down again. They had an income tax briefly and then it disappeared, went away because it was unconstitutional. And then when they brought the income tax in, it started to go back up. But up until 1910 or so, we had 1% to 2% of GDP was in taxes, and the British were paying 20%. If you lived in London, you were paying 20% of your income to the British government. And when the British said, "Why don't you pay more like our 20%?" we started shooting at them until they left. And the Patriots were our team. The other team was known as Friends of Government, and that's true today. People who want higher taxes are friends of government. They are often people who make a living off of government. So as we move forward on this conversation, we have a history in this country, and this big new government is relatively new as a country. More than half of our 250 years, we didn't have any of this, and how we got suckered into it with people promising other people will pay for this. Excise taxes, foreigners will pay for it. Rich people will pay for it. The Spanish-American War was to be paid for a tax on rich people. It was a tax on long-distance phone calls. And a phone at the time cost $4,000 in today's dollars. So only rich people had phones. Only rich people had friends who lived far away if you needed to call. Not going to be me. And pretty soon, everybody in the country had a phone. And we were all paying. For 100 years, we paid the Spanish-American War tax on phones. It took court decisions to end that. The Bush administration wouldn't get rid of it by law. It finally went away. So the fact that you have to lie to Americans to impose taxes on them lets you know that people understand that the deal they're offering, if I can have this tax and we're going to get this benefits, they know it's not a good deal, or they'd say it up front what it is. So they have to lie about it. Only rich people will pay this, or businesses will pay it. So this is the sales pitch always, which is, and if somebody tells you to do this, we need to raise taxes, you know, a couple of things. One is, you're telling me that everything else the government does is more important than your new idea, because you couldn't stop doing something else or do less of it. Only a tax increase. You'd only do this with a tax increase. There's nothing you drop out of the federal government. Then you know what? It has got to be one of the stupidest ideas we've ever heard, because all of the fraud, and I'll make a list of the things I want nothing to do with paying for. You could get rid of those. You could reduce them in half. You could only do half stupid. But you won't do that. You want more money. This means this is the least important idea the federal government or the state government has ever faced. Now, do you want to raise taxes for that? No, I don't. And it's fascinating to me that politicians like say, this is so important, I'm willing to raise taxes. No. It's the other way around. If it was important, you drop something else.
Well, we brought up in the last episode, like, education. And so we just continue to throw more money at a problem in some ways, right? But one of the things I think it's so important for the country to understand the rhetoric behind this push. And there's this, and it's long time said, but it's new. It's not new. It's just increased ever so more now. And that is, the rich don't pay their fair share. And we know that that's just not true. If you break this down, the rich pay a larger sum, and it's grown, has it not?
Yes, and with our income tax and so on, it is, if you just look at the taxes raised, it is very weighted against higher income people. If you look at the jobs killed, it's the lower income people and the people who never get the job that have 100% tax on their future. The neighborhood that is devastated, the part of town that people leave, the factory that goes bankrupt because of high taxes. So the actual damage done, the 100% damage, is done to the person who never gets the job, the person who ends up out of work. That's it. But on the reason why they want taxes on the rich is not to get more money, because even the Democrats understand that when you raise the marginal tax rate, you discourage work and investment, and you get less money. When we cut the corporate income tax raised was higher. Okay, when we cut the top marginal tax rate, the people who paid the top marginal tax rate, which was now lower, paid more than before. This happened under Coolidge, this happened under Kennedy, this happened under Reagan, and the opposite happened under Obama. So we know this, and the liberals know this too. The reason they want to say they're raising taxes on the rich is so you will not object as strongly when they pick your pocket with a value-added tax, a sales tax, a property tax, Social Security tax, whatever it is. Look at this. Oh, tax rich, and then they're picking your pocket. Okay. And they know that. That's why Europe, which is such bigger government than we have, their top rate's not that much higher than ours. They talk about it a lot. What they do in order to make money, because they know that they raise rates, they don't get more. You've seen the charts. Raising the capital gains tax gives you less capital gains money. Raising the top rate gets you less money. And what they want is more money. The only reason they raise those top rates is to justify the value-added tax, which you are going to pay, which is the left's big goal in America. It's what they've won. The difference between the United States and Europe is the VAT. They have a 20 or 25% value-added tax. It's a sales tax at every level of production. But why would so the European whole thing is much less graduated, much less progressive than America's, because they have this huge tax, sales tax.
Well, I do want to get to Europe, but Rick, like, what I want to ask you, like, this idea that what is the public not understanding about this, the rich don't pay their fair share myth?
Look, when we go back to the founding, right, and our founders understood, Madison wrote about it in the Federalist Papers, that the desire to have somebody else pay for the things I want is universal and unfortunately very human. And so in response to that, they put checks and balances on majorities. They made things hard to do in order to restrain this existing desire to get somebody else to pay for things. And that's a foundational idea in America. The other thing I think is quite foundational, and which we don't spend enough time talking about it, is free market capitalism is the way in which we serve one another. And people have remarked about what some of them call the miracle, this idea that from the beginning of humanity until about 1800, people lived on about $3 a day. And then when you look at a graph of human financial well-being, it shoots up into the sky. What happened? Well, what happened was free market democratic capitalism. And what is important in making this system work, this system, which is, Grover talked about tax rates in Europe. We're in a situation right now where the wealthiest nation in Europe is poorer than the poorest state in the United States, right? I mean, if we somehow transported Mississippi to Europe, it would be the crown jewel. And the reason for that is that people respond to incentives. And when you start to raise taxes too high, if, for example, you were to add 12.4% onto the highest marginal tax rate in order to fund Social Security, as Grover pointed out before we started, a Republican senator wants to do, you are going to destroy incentives. You're probably going to crash the stock market, and nobody is going to be better off if that happens.
Okay, let's jump into this then, because I know that you both brought it up, and I was going to bring it to the end of the episode, but let's just bring it up now. So we have Bernie Moreno as a Republican from Ohio, and then Elizabeth Warren, no friend of freedom, senator from Massachusetts, are teaming up on a Social Security kind of fix. They're calling it a bipartisan fix. We know Social Security is a mess. No one on this podcast would disagree with it. I think it's really important here, though, and either one of you jump first. Like, what exactly are they doing, and what does it mean?
Well, first of all, they're raising taxes, and that's all they're doing. They're not reforming Social Security. They're not fixing Social Security. Social Security does not save money for your retirement like a 401k or an IRA. It is not sustainable. It is pay as you go. It is what other people have done. If a person did this, they go to prison for what they call a Ponzi scheme. You take money in, you pay somebody else with that money as if they'd earned it, or somehow that was their return on their investment. And then you promise the person who put the money in that you'll pay them back, but it's with somebody else's money. So there's no reform. And the Democrats knew that Social Security as it's structured doesn't work. It goes bankrupt all the time. They've just been putting more money into it. So unless you're going to fix the system, it's just going to keep falling apart. There's nothing that they're talking about doing that would make that stop. So it doesn't solve anything. But back when Clinton was elected president, Social Security was a mess and it was going to go bankrupt. And Clinton raised taxes. He spent none of it on Social Security. And then when Obama got elected, he raised taxes and he put none of it into Social Security. And then when Biden got elected, Obama actually created new unfunded liabilities that were also going bankrupt faster than Social Security, making more of the promises that he couldn't pay for. And then the big green New Deal, the Green New Deal, the $90 trillion that we didn't have that they were going to spend. They raised taxes, spent it all, and we're going to try and commit us to $90 billion out into the future. And one of the things Trump doesn't get enough credit for is he broke that. We were heading off the rails, and that it's still a mess, but it's not fatal. Europe's just about killed itself with the Green New Deal type fund structures. So it is amazing that all the left does is they say Social Security is going bankrupt, give me money. And I'm sorry to say the Republican senator from Ohio is the new kid on the block, and they said, who's the stupidest Republican we can find? And evidently they found one. Nobody else got tricked into this. They've been offering this deal to any Republican who wanted to get on TV and get quoted in the New York Times, and who can't count and do numbers and doesn't care what happens to the economy. They found one guy. And so he signed it. This is not a bipartisan deal. This is an idea cooked up by Elizabeth Warren, and she found somebody foolish enough to sign on to it, which is odd because he ran promising to never raise taxes, promising to be a small government person, promising not to give in to labor unions, and for some reason he double-crossed the voters of Ohio. This will destroy the Ohio Small Business Committee. Every Ohio small business, because small businesses pay both sides of the Social Security tax, it takes their income tax burden up to 56%. This is European levels, the levels that give you an impoverished Europe. He wants to do to Ohio.
Break it down though. Like, so it's 12 and a half and 12 and a half. Like, just walk our listeners through this.
Well, that's 12 and a half to what the rates are, because it's the two sides of Social Security. The individual side and the business side are both paid by self-employed people, by independent contractors, and by businesses that work as pass-throughs or subchapter S corporations. It's basically somebody who runs a business, but they do it with their own income tax, their own personal income tax, as opposed to having a corporation which pays taxes that then gives money to the guy who's the business guy who then pays taxes on it. When you have a subchapter S corporation, it's all rolled into your personal account, and you add that to.
So an S corp making $300,000 a year is going to pay what? What's their tax rate under this plan?
The tax rate would be 12 and a half on top of their top rate now, which is 37 or so.
Okay.
Pat knows we've talked about this on this podcast, and I've told this story that a long time ago in the mid-1980s, and I was a young lawyer looking at Social Security and the demographics, and we knew what was happening. Like, demographics is like the future, and it's already happened in some sense. I used to say, this is crazy. The system has to be changed. These old geezers are going to have to do something, I said. And it never occurred to me back then in the mid-1980s that I would become an old geezer and nothing would have been done to reform the program. And simply adding, a marginal tax rate, which I think will cause serious distortions in the economy, isn't the way to fix it. It would have been a lot easier to do it back when I was that young lawyer than it's going to be now. But raising the cap is not the way to do it.
What do you mean by the cap again?
So you only pay Social Security tax on your income up to about, I think this year is about $184,000. And the reason for that, of course, is that although benefits go up with income, they don't go up. They're capped, right? Benefits are capped too. And so the idea is, I'm not going to get any additional benefits. There ought to be a limit on the Social Security tax I pay. The system is still redistributive. I mean, the funny thing about the debate about this is that there's a lot of time spent on talking about upper income retirees who are receiving the maximum benefit. But the way the system is set up, they are actually the only retirees who actually paid enough in the system to actuarially justify the money that they're receiving. Most people didn't. And this is why we've got this, and the fact that demographics have, gone south are, the reasons why we're having the troubles that we're having today. And, Grover called it a Ponzi scheme. A Ponzi scheme works until you run out of marks. And, when you don't have people to pay into the system anymore, the Ponzi scheme is going to collapse. And so it was poorly designed from the beginning. It has to change. And just raising the cap doesn't do that.
It was dishonestly put together from the beginning.
Yeah, absolutely. Intentionally so, right? There was the new dealer who said that, a program that isn't universal is a poor program, because what they wanted to do is create the system that they have today. That is one where unraveling it is extremely difficult to do, because people were forced to pay into the system, but that money was not used, not set aside, not invested in order to finance their benefits. And now trying to get out of it is difficult without disrupting reliance and settled expectations. But nevertheless, in some way, it's got to be done because the system as it was designed is not sustainable.
In 1960, 7% of Americans own shares of stock directly in their own pension plan or just in their own savings. And today, that's about 65%. So we have individual retirement accounts, we have health savings accounts, we have educational savings accounts, we have 401ks. Millions and millions of Americans, 65% of them, are in the market. They have a pension, which is defined contribution rather than defined benefit. Defined benefit, it says, we promise you X number of dollars, regardless of what happens to the stock market or whatever, however we get the money. Social Security is defined benefit. A lot of the labor union contracts are defined benefit, the ones that go bankrupt. But defined contribution is you put in this amount of money, and what you walk out with is whatever the stock market goes up to. Could end up being, it's a lot more than Social Security. It's many times more than people would earn on Social Security. Plus, you actually have the money that you saved during your life. So if everybody had put their money into a 401k instead of Social Security, the last time I looked at the numbers, the average person would have $500,000 to $1 million cash and be getting throwing off from that 3 times what Social Security pays for you. Those are rough numbers, but there have been several different write-ups at different points in history, starting with Peter Farrar in 1978, plus government studies as well. So had we started with a 401k IRA structure, everybody in America would be significantly richer than they are today. Social Security has made people poorer than they would have been if there'd been no Social Security. So one of the things we've done is we've kind of privatized Social Security. I don't know what the polls say now, but back years ago, the poll was, what do you think the likelihood that there are flying saucers, UFOs, and what's the likelihood of Social Security? That's in separate times, not at the same time. But when you compared them, people were more likely to believe in UFOs than a young person under 30, than they'd ever see Social Security. And that's a lot of collected wisdom inside people under 30 who get at that age that this isn't there for them when they get out. So people have been hedging their bets by protecting their own retirement moving forward.
I agree with that. I think that's a really good way to describe kind of what the situation we're given. And honestly, like Social Security is kind of indicative of the system we're now being sold. Like Elizabeth Warren also goes around and says we need to take Elon Musk's money, which isn't really, it's all in stocks and stuff like that. So it's not theoretical dollars sitting on a pile of in a bank. And then we would pay for childcare, we pay for healthcare. They have a laundry list of programs that could all be solved, which of course have not, like you brought up earlier, have not. But how can we push back against that, I guess? What's the easiest way to do that?
I would argue that federalism is our big ally, and this is why we're going to win. If you look at, am I allowed to show
You'll have to describe it for people. Go for it.
If you look at the 50 states, there you have real competition. And so when you ask yourself, what happens when you raise taxes? What happens when you cut taxes? It's not just an economist projecting or even a historian looking back. You can see in real time what happens to high tax states versus low tax states. There are today 8 states that are at 0, do not have a state income tax. They pay federal income tax, but no state income tax. There used to be 8 additional states that had a single rate tax. In the last 6-7 years, that number's doubled. So the American people have rejected in 8 states the idea of a graduated income tax, Karl Marx's brilliant idea that we should have if you make more money, you should pay a bigger percentage of the money that you own, which of course is very bad for economic growth and plays to envy. But Democrats love it because you can divide the electorate into different groups and mug them one at a time. We're not going to tax you, only this guy. And then they come back and they get you, and they divide people up and again, mug them one at a time. So we now have 16 states that are single rate, plus another 8 states that are at 0. So 0 is my favorite flat tax number, single rate tax. So it's 24 states that have single rate 8 of them are zero. There are 2 other states that have passed laws that will take them to zero in a few years, Kansas and South Carolina. But even more interesting, there are 5 states that have passed a law to phase their income tax to zero as revenue comes in from economic growth. Every year, click, click, click. The teachers union gets to steal some, but much of it goes to a permanent reduction in the state income tax. South Carolina is one, West Virginia, Kentucky, Mississippi, and Oklahoma. 5 states that are on their way to zero. And again, the governor doesn't have to do anything. The legislature doesn't have to do anything. You just sit on your hands, and over time, it clicks down. North Carolina got the ball rolling. At Americans for Tax Reform, this has been our central project at the state level. And we found North Carolina was working on this about 13 years ago. And they came up inside North Carolina with the idea that instead of spending money at one level, you set a cap on it and revenue goes above that level, you take some of it and take the rate down. They did it very cautiously. In 12 years now, they've cut the rate basically in half, but step by step, very cautious. Other states have looked at that and said, we could go faster than that, but they feel confident that they're not going to get ahead of their ski tips because they've watched for years North Carolina weather good times and bad times, and that it works well. Everybody's been able to write their own state version of it, but they all look very similar to the North Carolina approach, which is both a spending cap and a phase the income tax down. Now, there are 7 other states that haven't yet passed a law that takes you all the way to zero, but the governor, the House, and the Senate have all said, we're going to zero. Here's how, and Iowa's already gone from 8.6 down to 3.8 in a 4-year period. So they're going much faster than North Carolina on the way to zero. Our friends in North Carolina are only halfway there. They started the whole ball going, but they're clearly going to zero. Ohio has gone from 9 rates graduated down to 1. And the governor, if the Republicans win the governorship, but they have 2/3 majorities in both houses, and the governor committed to take that to zero. Our friends in Arizona want only a Republican governor, and then they go to zero. They're already down to 2.5. So Arkansas, the Republican governor there's taking it down, click, click, click. Every year they have a new tax cut. I would prefer to make it automatic because someday a Democrat might be elected governor. And when that happens in Kentucky or South Carolina, or North Carolina, they go, we don't care. We're clicking to zero. Even if you're a Democratic governor, you can't stop it because it's automatic. So I prefer the automatic, but in Arkansas, every year they've taken it down. Missouri goes to the ballot this year to begin the phase down to zero. Indiana's committed to going to zero as well. So Georgia, all the candidates for Georgia statewide office committed to go to zero. And the guy who won the primary for governor announced on election night, my first term, we're going halfway to zero. The second term, we're at zero. So he recommitted to get them down to zero. So when you say, what does America want? What do taxpayers want? You wonder why somebody would go, I think what they want is a $3 trillion tax increase. Look at the states that are taking their income taxes down to zero and compare them to California, looking at a tax on your life savings. They say you have to have $1 billion, and they say it's only one time, but the law will allow them to do it as many times as they want. They just have to have a majority of the legislature if they pass this measure on the ballot, which they're trying to do.
I want to pause there because I do want to bring up this concept of a wealth tax. I think so. We've talked a little bit about income, taxing income, but there's also this idea of a wealth tax. And so maybe Rick, walk us through kind of philosophically why that's a disaster for the country, and maybe we can then dive into the economic ramifications as well.
I'm sure Grover will have a lot of details, but the idea here is that an income tax is a tax on a flow. It's a tax on income that you receive in a year, and you pay your tax on what you've earned. What you retain, that's your wealth. You get to keep that, and no more taxes, at least in theory. And California now wants to impose a tax on someone's wealth that is money that is in the bank or money that they've used to acquire assets upon which, for the most part, they've already paid taxes. This is something that's been tried elsewhere in the world. It's been tried in Europe. Most European countries have abandoned it because of a variety of difficulties. One, of course, is deciding how much a particular asset is worth. Another problem is the fact that asset values fluctuate. I mean, I took a look at my accounts at the beginning of last week. They were a certain number. If I looked at them today, they would be a lower number because the market has declined. If I've paid taxes on this higher valuation of the asset, do I get it back now that the asset has declined in value? It's also, I think, distortive. Sometimes I think our friends on the left think that, people who have a lot of money are kind of like Scrooge McDuck, and they have it all in gold coins that are put in an empty swimming pool, and they jump in there when they get home every night and they roll around in it. But the fact of the matter is that people who have that kind of wealth, a great deal of it is tied up in companies that they've owned and built. And as I noted earlier, that have successfully served others. They have supplied goods and services that others need, as evidenced by they're willing to pay for those things. And so, wealth tax, if you do it repeatedly, I think California says, it's going to only be a one-time tax, but nobody believes that. But if you do that repeatedly, then ultimately you're going to distort the market. These businesses are going to have to be sold, and that may not be the best thing to do with them. And so it's a horrible idea. It's been abandoned whenever it's been tried. And but again, it appeals to this instinct that Madison feared and that our founders attempted to guard against, this notion that, in a democracy can devolve into something where 51% of the people vote to rob the other 49%. And they didn't want that. We shouldn't want it now. And everybody tells that, this is just a modest wealth tax, I think, and Grover probably knows the details better than I do. The income tax, when it started in 1916, was only supposed to be a really small tax, just taking a little bit of money from very, very wealthy people. And look how that turned out.
When they first put that in, you had to be making $11 million in today's dollars to pay the top rate of 7%. Today, the bottom rate is twice that, and half the country's paying it. So yes, this idea that it'll only hit a few people is the way they introduce all new taxes. It'll only hit the rich first, then you. You mentioned the wealth taxes overseas. There were 12 in Europe. Now they're down to about 4. As I understand it, Spain has one that still bites. The other 3 on the 4 don't, sort of been neutered. But they used to have 12. And they decided in Europe, in socialist envy-drenched Europe, they couldn't make this work. How do you think they're going to make this work in the United States? And they've even begun to admit what the game is, because the gentleman with the National Socialist tattoos came out for some sort of a international tax, wealth tax, because you might leave your state and you might leave your country because the tax is so onerous. And then he would employ both China and Russia and other countries in hunting down people with money. So we're going to be giving the Russians and the Chinese the right to go look around for American rich people who might leave the United States and do something with them. It's too icky for words. But once you get into that kind of tax collection, it gets that gross.
We're doing a really good job kind of shattering some myths here. I want to stay on Europe for just a second because Grover, you brought this up earlier. It is true that Europe, they tax their citizens more, but they don't just tax the rich. They have a value-added tax, do they not? Don't they just basically?
Yeah, they couldn't get the levels of taxation if they only taxed high-income people. When you tax high-income people and corporations, you kill growth. So there's fewer jobs, fewer money. You lose money at those high rates. If they were lower rates, the government would get more money. But the deal, if you're the government, you go, I need more money. The only way to get it, like the guy who robbed banks, is, Willie Sutton, you go to the banks. You go to the broad masses of the American people who have most of the income, and you want to tax them. but they tend to bite your hand if you try and do that. So what you say is, well, we're going to have this temporary value-added tax and get rid of some other taxes. Then you put in the value-added tax. You don't get rid of the other taxes. This is how Europe got set up in each of these countries. Oh, it's going to be small. These things are now 20 and 25% VATs across value-added tax. It's a sales tax at every level of production, so you can't avoid it. If you had a 25% sales tax, everybody would buy their stuff down the street from Costco out of the back of trucks. You couldn't enforce a 25% sales tax, but a value-added tax where you get in between every level of production, that you can do, and they do it in Europe. But that gets all your money, and then they have wage taxes as well, like our Social Security taxes, sort of thing, and they have all that money, and then they go, "Oh, look, we're taxing rich people," and you're supposed to feel better. But the real cash that they get comes from the middle class, because if you raise taxes on people who can decide, well, I can always not work. It's not like Elon Musk has to go out and and work every day. That hasn't been true for several decades. He doesn't need another house. He's got enough wives or something. He doesn't need anything else. He does this to change and make the world a better place. And if you took $1 billion from him, he wouldn't be any less well off in terms of having fun or whatever it is that people think billionaires do with with $1 billion. But what you would do is you'd lose that investment that was putting satellites up in the sky and building cars and all the things he does, and you give it to the government, they piss it away in 25 minutes.
Well, and if you look at Europe, I mean, that's what I think is great about this World Cup is like now you have all of a sudden like, Europeans are coming to America and they're like, look at this gas station, look at the Buc-ee's, look at all the and sure, I think in some ways our food could be a little healthier, but look at all the stuff we have here in America,
You do notice they want our food, okay? This thing that's not healthy is just some sort of thing that if it's really good, it must be bad for you. No. That's ice cream is healthy.
Rick, compare the American way of life to Europeans and the approach to taxes, I think, and how that showcases what's really going on.
I have to say this. I mean, in a prior life, I was a general counsel for a Milwaukee manufacturing firm, the type of Midwestern firm that makes stuff out of metal that if I showed it to you, you wouldn't know what it was, but it's very essential. And the family that owned the business made more money than God. And sort of the people, incidentally, who worked for them, they made a lot of money too. But we had subsidiaries in Europe, and there were a couple of things that were true. First, if I were to go to, say, Copenhagen, which is one of the places where I had to go, the standard of living was noticeably less extravagant than it is in the United States. A successful lawyer in Copenhagen would not live like a successful lawyer in the United States. And the second thing is that, and I think we touched upon this before, is that although there are European companies, I don't think it's wrong to say that they want to and that they try to tax the rich. They also really tax the heck out of the middle class. While, a country like Denmark is fairly capitalist. I mean, in some ways, regulatory burdens in Denmark were less than in the United States. You didn't get to keep much of your money. And I think this created a different incentive structure. And, over time, that makes a difference. And, this is why we mentioned earlier that the United States has significantly outpaced Europe in wealth. And this isn't just billionaires that have enjoyed this. I think that, most Americans would have an opposite reaction to the reaction that some of the Europeans of having are here for the World Cup. They would go over to Europe and they'd say, nice place, beautiful old churches, but I really wouldn't want to live here.
I would like to see a book where we printed all of these comments made in social media, by Europeans who come over and talk about how different it is. Because most Americans don't understand. If they do go to Europe, they look at cathedrals and they stay on the Champs-Élysées, but they don't walk 500 yards out from there and see the smaller houses. They don't go into somebody's house and realize that in the middle of summer, they don't have air conditioning ever. I mean, the standard of living in Europe sucks, and you wouldn't want to live there. And no American would put up with that stuff. They'd sue their landlord if they were stuck with that size. There was a great study done by Heritage years ago that the average European had less floor space than somebody on welfare in the United States in terms of how big their house or their apartment was. It's a different level over there. And Americans visiting there don't see that because they go out to restaurants and things like that. These guys come over and see average Americans. It reminds me of the Soviet Union used to show pictures of people during civil rights riots in the United States. And they stopped doing it because everyone in Russia's looking at the shoes that the oppressed people were wearing. And they go, wait a minute, what are they complaining about? We don't have shoes like that. The difference in the standard of living is stark. And you can add that to how long you live if you have to wait 6 months and 2 years for some of the healthcare that you have to wait for as they ration it in Europe. They don't deserve to do that to their own people. And I don't think we should do this to people in California and New York either. That's why I like federalism. I believe at the end of the day, enough people will move out of Florida, out of California, New York, into red states, from blue states to red states, to move the congressional majority into red states. So you have a permanent Republican majority in the House simply because the population has shifted. And that'll also give you a semi-permanent electoral college win, which is why the left is so panicked. 15 years from now, it'll be hard to see how a Democrat wins the House or the presidency because of the number of every 10 years, another 10 votes move from blue states to red states. And federalism speeds this process up. People move to right to work states. They move to low tax states. They move away from overregulated and expensive states. And before I emigrated to the United States, I used to live in Massachusetts. So I have a soft spot for it. And someday Massachusetts will wake up because they noticed that everybody had left. And they'll have to change their way. So they will recover, and then they'll be okay.
One thing I just wanted to touch on before we kind of wrap up the conversation, though, is, right now, the rhetoric we see from the left seems to be very much pitting certain Americans against each other. And I wonder if you guys agree with that and wonder if it's bad for the country.
Envy is a sin, not a political program. And the Democrats have gotten into the gutter where they have to demonize people. In Asia, it's the Chinese entrepreneurs that people hate. And in Africa, it's the Lebanese traders and businessmen. And years ago, that people go after the Jews and the bankers, and they would demonize a group. And then it was okay to steal their stuff or kill them. And the Democrats are playing the same game with successful Americans and say bad people, because they have to. How do you explain, I'm going to go steal that guy's stuff and make it sound like it belongs in a civilized society? First, you have to demonize the group, the people, and then you can steal their stuff. I think most Americans, the healthiest number that I've seen that's been almost unchanged at 70% for decades is whether people think the death tax is fair or unfair. And most people don't pay the death tax, but 70% of people think it's unfair to have a death tax at all. Not that this affects them, but they just think it's wrong to tell somebody you've already paid taxes on something. And by the way, now if you're stupid enough to die, we're going to take half of it. I think we are more immune to, not fully immune, look at New York, Mandami and all that nonsense, but as a nation more immune to that than Europe has been than the countries that fell to fascism and socialism have been. That's American exceptionalism. We relish other people's success and realize we're better off because Elon Musk is making Starlink, okay? And cars that drive themselves. Things like I can't do that in my spare time. I've got other things to do. He's doing that. I'm supposed to be pissed at him? What's this?
Rick, any closing thoughts before we move to our final segment?
No, I mean, I think that we live in a time where these appeals are very effective. We've talked about this before. I think that Saul Alinsky was a horrible person. He promoted this type of thing, but we see it a lot in our political rhetoric now, that playing on the human tendency to believe that there must be something else, somebody else who's doing something to you, and that's why you have a problem. And the reality is that most of our problems are more complex and intractable than that. But as our attention spans dwindle with social media, nobody really has the patience to listen to that anymore. I mean, it's a difficult tendency. It needs to be broken, and probably will be broken eventually, because at the end of the day, these type of appeals are empty and they don't lead to anything that benefits anyone.
That's really well said. And I think we have, one of the reasons this podcast I think is going to help accomplish is our audience and informing people about all this rhetoric around taxes and just the information that I think people don't really get. It's all these really quick, short, snippy responses back and forth, but not really a deep dive into the discussion and why so much, because the left really gets they kind of have a drive-by comment on the rich or bad. And this is the problem, but it's well, actually, let's take their argument and see where it's working and where it's not. It's not, and Social Security is a great example, and Europe's a great example. But anyway, Grover. So how we kind of close out the episode, and your history clearly by some of your for opening comments. We let our host, the guest, talk about a moment in history you think America's doomed to repeat.
I'm going to argue that the mistake that I fear most that we would make, but I do not believe we will make, is to revert the modern Republican Party to revert to its pre-1994 position. For 62 years, from when FDR, Franklin Delano Roosevelt, took over to 1994, 62 years, the Republicans only won the House and Senate twice. 4 years in 62 years, Republicans controlled Congress. And Congress runs the country. Presidents start wars, presidents have scandals, but they can't make taxes go up or down. They can't make spending go up or down. That's Congress. They can't pass laws. That's Congress. They can't even put people on the Supreme Court. That's the Senate. Okay. So this is where power is in the House and the Senate. For 62 years, Republicans had power twice. Since 94, which I happen to note, was the year that 96% of Republicans signed the pledge never to raise taxes, that Americans for Tax Reform began sharing under the Reagan administration in order to build this line in the sand that Republicans will not raise your taxes. We may invade small countries we can't pronounce, but we will not raise your taxes, okay? Since 94, Republicans have won control of the House and the Senate. 18 years, Democrats 6, and 6 divided. So we went from the Republican Party that would not raise your taxes. We will reform government, because that's taxes, you raising taxes are what you do rather than governing. Republicans will govern. We will not raise taxes. Having made that commitment and kept it, Republicans have governed 3 times as often as Democrats. And the Democrat #1 agenda, and they set up phony conservative groups trying to do this, and they try and seduce individual members to do this. They're trying to break that. I think they'll fail, but that's my #1 fear, that the Republicans could end up going back to deciding, oh, we could be the tax collectors for the welfare state. That works so well in locking us out of power for 62 years. Let's do that. I don't think that'll happen, but that is the danger. And if that doesn't happen, then we're in great shape, that federalism alone will drive us to the correct answers to fix things in the 50 states. The ones that get it right will be good examples for the ones that don't. And like people, some people serve as bad examples. and that's their role in town, and that's what Rhode Island does.
My concern is that we'll continue to kick the can down the road, Social Security being a prime example of that, perhaps. What we'll do is there'll be some patchwork solution that isn't really a solution, that simply delays the perceived need to deal with the problem, like raising the cap 12.4%, and that we will not make the fundamental changes that need to be made in such a program.
Well, thanks to our listeners for an incredible episode. We are excited for what lies ahead. You can find our next episode at will-law.org/podcast or wherever you get your podcast.